Good morning, guys. How are we all doing? I am Dan from Trading with Dan. Happy Monday, everybody. Welcome to the new week. Obviously, it's a bank holiday over here in England, and it's holidays in other parts of the world as well. But yeah, futures markets are still open. Crypto markets are still open. So here we are. Let's go straight over to those Bitcoin 4-hour charts, where you can see we are having an attempt to get back above this resistance area. Currently not managing at the moment. We have broken above this trend line that we had in, which is not looking too bad in that respect. Obviously that could give us that little bit of momentum to get us through this resistance. Then if we do, we've got a decent chance of getting back up towards the $41,000 level. Obviously in the larger picture, or we could probably even say in the medium time frame, still a very weak bounce, not looking great. But if we do look at the larger time frame, we could potentially be trying to put in a higher low relative to these lows here, in the context of this ascending triangle, and ultimately have a shot of breaking back up, even if we don't make new all-time highs, at least into the mid $50,000. I think the reason why we're having this little bit of respite is if we go over to these S&P futures. Basically, they've just not crashed lower yet. Obviously, that is a yet. They could do. If this had opened and traded low and we were down and we're in this area, then yeah, crypto would be lower. But obviously, crypto appeared to have been, as a risk asset, had been sold over the weekend, anticipating obviously the risk of a move down here. And then because we haven't got it yet, there is a little bit of a relief rally, somewhat obviously, nothing major, but a little bit of a relief rally, just on the basis that those stock futures didn't open a lot lower. So if this does bounce here and continue upwards, then yeah, I mean, fully expect that move up towards 41,000, and then if this can get above 43, if this can get above 43,100 now, it would obviously take out this trend line again, take out this, and then also this resistance, and then yeah, we could then see a low put in here, and then continue upwards. But obviously that is all if buts and maybes at the moment. We need to see how this market trades going into this week, and then obviously we have the FOMC as well. So lots of a catalyst for a potential move. The DXY obviously looking disgusting, not sustainable. These moves are never sustainable, but calling the exact top is obviously not the easiest. But this is so textbook looking, like that J hook blow our top, and like even if this is to remain bullish in the longer time frame, it has to have some sort of a pullback. It's similar to like what we saw in oil. Where's oil? Similar to what you saw in oil, where obviously there you go, you had the massive move up, the last blow off, and then yeah, I mean, ultimately if this just break onwards and upwards and continue up, that is fine, but you can see it had a major pullback and consolidation before it potentially does that. If it is even to do that, maybe it breaks down lower, who knows. But yeah, similarly, if we can see basically the same chart on the dollar. It ain't gonna continue straight up. It is causing all sorts of pain in all sorts of areas across the globe, and obviously the US is gonna have to do something about this. So yeah, obviously a lot of it is, if we go down to is the constituent currencies, clearly, because this is just the dollar against other currencies, and the euro is understandably getting hammered, because the euro is obviously the area where obviously the latest conflicts are occurring. So yeah, you can see this pretty aggressive move down, and obviously this is the largest constituent of the basket of currencies that the DXY trades against. So yeah, obviously getting pulled down. Let's go and look at gold as well. Gold not looking too good. Did initially have a nice bounce off our support to our resistance, and then and then resisted and back down. So yeah, nice to see the levels working. However, it's not looking great. Come and test it again. We could probably get a deeper move into it, but ultimately this was what I was saying for a long time. Should be the higher value relationship for gold. This being the lower part being tested, so we had this 1840 level we needed to get up above. Once we were above it, we had a nice pullback, and now we are just sort of backfilling and back testing, and this is the 1880 to 1840 area that I did say a while back I think will hold for gold. And then we just basically potentially just trade sideways between here and, like I say, around $2,000 before, well, deciding whether we move higher up or basically back down. So yeah, gold potentially in a buy zone. Silver wrecked. Look at it. I mean, silver clearly weaker than gold because silver is back in that old trading zone that it was in prior. Obviously got this support down here, which ain't a million miles away from. I wouldn't be displeased at all to see silver break below here and come back lower, because it would be a time to just buy some more silver, basically. Just a hodl. Just hodl and just leave, leave for a rainy day. But yeah, having a look over oil as well. I mean, whilst it obviously isn't in this triangle anymore, it is still putting in lower highs and relative higher lows as well, as you can see. So still in a tightening formation, even if this is the triangle that it is not necessarily in anymore. But yeah, ultimately we can now just revert to the horizontal levels. We've got this pretty much to the upside, this next one ish to the upside, but we could probably draw like an area here now on this. We'll just draw it here. So we've got this resistance to the upside as well. We'll draw it in. Yeah, so basically, I mean, I would probably say yeah, we've got a resistance area here now as well, there about there as well. We'll draw that in as well, because it will be important to see whether this does break basically to the upside or break lower, because it is going to be a major headwind if it breaks to the upside, and it is also going to be a major indicator of basically what could happen going forwards. If it breaks the downside, it is obviously going to be factoring in recessions, slower growth. So yeah, keeping an eye on this. But yeah, this is probably the important level ranges now in here. Within about 109 roughly, and this 94. We're looking for a move, but clearly it is the higher lows are only marginal, and the lower highs are obviously considerably lower. So it is looking like a skewed descending triangle. So clearly an attempt, a chance, a high likelihood of breaking to the downside. Also, obviously, with the recession, depression, slowing growth, whatever we've got going on, would result in a downward price action for this. DXY, sorry, not DXY, US 10-year, there or thereabouts again, hovering around these highs. These markets are looking extremely toppy. And well, you would hope that these markets are looking not that it's a real word, but extremely bottoming, and then we can try and basically mount a decent rally. But yeah, you would, like I said, you would hope, because it doesn't particularly look like it's going to stop here. But do you know what I mean? You would hope it has. You can hang your hope hat on the fact that the DXY looks cooked, and this 10-year looks pretty strong as well. So they could have a bit of it. We could have a mean reversion at least, even if it isn't anything other than that. So yeah, maybe the S&P can get around 4,400, and then we'll just reassess if more selling comes in there at that point. But yeah, obviously we've got FOMC coming. We've got a big catalyst. Anything else I wanted to look at on here? Not particularly. Yeah, I mean, above this resistance area for Bitcoin, we can get this move up into this area, and then ultimately if we get above here, above 42, then we would be looking extremely good for a move to test the upside again of this around 46, 47, and then who knows, we could break through onwards and upwards and make the move higher. I do think at some point we're going to get a decent pullback in the dollar, and that could be the catalyst for this move. It's just a case of how bearish things are before that pullback does come. And does it push Bitcoin low? Because Bitcoin is in a precarious situation. It isn't going to take much more of a squeeze of this to the upside if it is to happen. One last squeeze up could quite easily, well, would almost certainly break us below this trend line, and then yeah, we'll be looking at mid 30Ks. Hopefully then to get the pullback in the dollar, and then we'd have more work to do. We would have this pretty important trend line to obviously get rejected at. So we kind of need to make this move now. A lot is obviously predicated on the FOMC. A lot of it is obviously based on, by extension, is based on whether this can hold here and start to move back up. And then whether the DXY is gonna pull back from here. Lots of if, buts, and maybe. These are very uncertain times. The market is extremely bearish though. So if everybody's bearish, is anyone else left to sell? Clearly we had a lot of put buying. I think they were around the $4,000 and $3,700 in the S&P. So obviously the dealers had to hedge that risk, so they were selling spot. And then the best we can now hope for is obviously we get a good Vanna rally, as obviously they basically as we get towards an options expiry, that the dealers can unwind their hedges that they put on against all the heavy put buying, and then we can get a proper good squeeze, a proper good bounce, a proper good rally, and then see where that takes us. So remember, this is not financial advice. I'm not a financial advisor. Always do your own research, and I shall speak to you guys soon.